Hello everyone, my name is Moji. You're watching a Bitcoin Bubble News channel. A woman from Saudi Arabia, a guy from Bolivia, and another man from Colombia all got on the line. Another person is from Australia, and another is from Malaysia. There are also people from the US and all over Europe. There are a lot of people here from Africa and the Middle East, and they all have the same kind of sense of purpose. After that, a lot of them go home and build things. Part of the network effect is that they're building brands in groups. That's part of what makes it in the end. Many people know Lyn Alden as a smart financial analyst and business strategist who did a great study on Bitcoin. She was recently interviewed by Alex Jordanoff. Among other things, they talked about energy and how likely it is that Bitcoin will become popular. Based on what Lyn Alden, Bitcoin is digital cash that stores itself and can be used anywhere in the world. It can't be blocked, and it could become one of the biggest money systems in the world. Bitcoin is safe and its network effects make it a good choice for businesses and people who want to send big amounts of money to other countries. Alden also says that Bitcoin's unpredictability is a key part of its growth because it lets it go up and be used by more people. She rates the health of the Bitcoin network by how liquid its prices are and how well it works, such as the number of global hubs where Bitcoin fans are starting companies and groups. There are many people in many places who want a free money system, which makes Alden optimistic about Bitcoin's future. She believes that as these hubs get bigger, Bitcoin will grow into a network worth many trillions of dollars, much bigger than any single stock. Watch clips of the chat to find out more about what Lyn Alden and Alexei Dorjanov talked about. Give this video a like, follow the channel, and turn on post notifications to see more movies just like this. Bitcoin is money that can be sent anywhere in the world and can't be hacked. You can at least take care of it yourself. Plus, it's the biggest, most liquid, and safest cryptocurrency out there compared to other ones. Bitcoin is the only one that can handle sending $1 billion overseas. Then there are the network effects that come with that. It gets safer as it gets bigger, more liquid, and more valuable, which makes people want to own it even more. Because of this, price is a key sign. When it comes to adoption, it doesn't matter what happens every 1, 2, or 3 years. What you want to see is higher highs and higher lows in Bitcoin over, say, 4 years. This shows that adoption is happening. And yes, volatility is important because you want an object to go up in value when it is small. There's no way to go from a Bitcoin, which has a market cap of about $1 trillion, to something else. And the number went from 0 to 1 trillion. It hit $1 trillion in the first 12 years, then went into a bear market, and now it's back to $1 trillion. You can't have that without upside volatility. But with upside volatility comes borrowed money and too much excitement for a while, which is what causes periods of downside volatility. That's why it can't reach its full potential market without volatility going both ways. If Bitcoin gets closer to its total addressable market, for example, liquid net worth, do you want in a portable, widely portable, self-custodial, peer-to-peer money system like the best one? If so, it's likely to have a pretty big chunk of liquid net worth. A very small number of people even own any at the moment, and those who do generally only own a small amount. So I think the number of people who use it is still going up. I think it will be a multi-trillion-dollar network in the end. It seems like it would be bigger than any single stock, and so I think the instability will be there until it gets to that more mature stage. When it comes to Bitcoin as a whole and the health of the Bitcoin network, one of the main ways I measure it is by price and liquidity, but also by the network effect of all the people who use Bitcoin. So all the different hubs that show up. Coin Beach in El Salvador was one of the first, and they finally got the whole country to adopt it, at least at the president level. From there, it spread slowly to the rest of the country. Then we saw places like Bitcoin Ecosia in South Africa and Bitcoin Jungle in Costa Rica. Today, there are a lot of new hubs, and we're in Bitcoin Atlantis, which is one of them. Madeira is a good name for the place because you're on an island. I love it. In the Atlantic Ocean in the middle. But what happened was that a few years ago, a group of Bitcoin fans really paid attention to this territory and said, let's make this a little more Bitcoin dense. That's what we're seeing now. A lot more businesses accept it and a lot more people hold it than they did a few years ago. According to people who have been here during that time. That's what you see in these world's little hubs. I believe that the Bitcoin network will be better off as these hubs grow. You don't want all of your Bitcoins to be in one big ETF. That's what you want. I'd like to see Bitcoin spread out across all of these different groups of laws and countries. Talking to people from all over the world at these conferences makes me feel really hopeful. For example, I just finished talking to a woman from Saudi Arabia. a man from Bolivia, and another man from Colombia. There are also a lot of people from Bulgaria, Australia, Malaysia, the US, and other parts of Europe. That's right, a lot of people from Africa. Many people from the Middle East are here, and everyone has the same goal in mind. After that, a lot of them go home and build things. Building neighborhoods and businesses is what they do. This is a part of the network effect. Part of the reason it became one of the biggest money systems in the world is because of that. Based on what Lyn Alden, Bitcoin is a cryptocurrency that can be used anywhere in the world. It is self-depository and can't be controlled. She believes that instability is important for growth and wants to build a network worth many trillions of dollars with help from many countries. Alden says a lot of people get energy wrong. Because he is an electrical engineer, he knows that the energy system doesn't work as well as it could. There is no easy or cheap way to move energy from one place to another, and it can't be changed into other forms. It takes more energy to move things over long distances than to make things. Alden also said that supply and demand must always be balanced on the grid. This is not always easy because demand changes throughout the day and with the seasons. Allen made it clear that lost energy is any extra power that isn't used. There is a lot more wasted energy than there is used by the whole Bitcoin network. Alden used the burning of natural gas as an example. Even though the gas is burned and makes the world dirty, no money is made from it. People who mine Bitcoin, on the other hand, can use this energy to run their businesses and make a little money while also being better for the earth. Based on what Alden knows, the World Bank thinks that 8 times as much natural gas is burned each year than Bitcoin uses. Alden also said that there are lots of ways to use extra energy, like water power that isn't being used. Building up energy facilities can be pricey in developing countries. However, mining Bitcoins can help people use more energy and throw away less. We should talk about it again. Decoupling in part, but I also think that, we've seen this with gold too. Even though real interest rates were positive and the balance sheet shrunk, it held up a lot better than you'd think. In 2022, I think most things went the way you'd expect them to. At that point, net liquidity was going down a lot. All around, the prices of assets were pretty much going down. Anyway, by the end of that year and into 2023, things started to change. The Federal Reserve was still trying to be tight, but not as much as they had planned because of the economic dominance we just talked about. The broad money supply got more money as money came back from the reverse swap facility. Even though they mean to keep it tight, all of these signs of wealth have gone up since then. Other signs of liquidity are coming in, even though they've kept interest rates high for the industry and kept lowering their own balance sheet. Stocks are going up, Bitcoin is going up, and gold is still holding its own. Real estate took a small hit, but it's now back to its high points in the US as a whole, if not in the places where things are really hot. When you look at the average across the country, it's almost back to where it was before. And I think a big reason for this is that the Fed finds it hard to tighten when the government debt is this high, and when any tightening they do costs so much in interest, which is a good thing, of course. The business is getting a lot of fiscal deficits. When you have $2 trillion debts, it's hard to have a recession. Before the decline even starts, you're pre-stimulating. Of course, that means we could have a second wave of inflation.